Do you want to master ICT Breaker Block trading strategy like a pro to level up your trading? Breaker Block trading strategy is one of the various strategies used in technical analysis to predict the future move of any asset like forex currency pairs, commodities, crypto, stocks, or indices. This strategy originates from smart money concepts, and its foundation lies on the concept of order blocks. In this video, we will talk about breaker block trading strategy from definition to its formation and identification to its use along with visual examples. To identify and trade a breaker block, you must know about order block, because a failed order block is known as breaker block. Let's start with defining breaker blocks. A breaker block is basically a failed order block which is found after a liquidity sweep or market structure shift. No strategy is foolproof, and smart money concepts is one of them. So smart money traders buy at bullish order blocks and put their stop loss below the low of bullish order block. Likewise, they sell at bearish order block and set their stop loss above the high of bearish order block. But the market makers take advantage of it, and they hunt retail traders' stop loss and move market in opposite direction, hence breaking the order block, which turns out to be a breaker block. The principle underlying the breaker block concept revolves around the constant search for liquidity by market algorithms. Traders typically identify these order blocks and make predictions about market movements. A bullish breaker block is anticipated to drive prices up, while a bearish breaker block is expected to do the opposite. Consequently, traders set their stop losses accordingly, below the level in bullish scenarios and above in bearish ones. However, market makers and smart money traders often exploit these situations, triggering stop losses and pushing the market in the opposite direction by creating a liquidity grab. This is where the concept of breaker blocks becomes particularly relevant. Types of breaker block. As break block is originated from order block, and order blocks are of two types, so the breaker block also has two types. 1. Bullish breaker block. 2. Bearish breaker block. Bullish breaker block. ICT refers all the up-close candles before the swing high that swept liquidity and later price broke it as breaker block, but the last up-close candle is the most sensitive one. That is why we mostly use it. So a bullish breaker block is basically a failed bearish order block. When a bearish order block is broken, price close above the high of bearish order block, it acts as a support and push prices higher, so it is known as bullish breaker block. But to identify a valid bullish breaker block, you need to check following things. 1. A valid bearish order block. 2. Price closing above the high of bearish order block. 3. Liquidity sweep. 4. Market structure shift MSS. Bearish breaker block. ICT refers all the down close candles before the swing low that swept liquidity and later price broke it as breaker block, but the last down close candle is the most sensitive one. That is why we mostly use it. So a bearish breaker block is basically a failed bullish order block. When a bullish order block is broken, price closes below the low of bullish order block. It acts as a resistance and push prices lower, so it is known as bearish breaker block. But to identify a valid bearish breaker block, you need to check following things. 1. A valid bullish order block. 2. Price closing below the low of bullish order block. 3. Liquidity sweep. 4. Market structure shift MSS. Bullish breaker block trading strategy. In trading, we prefer to go with the trend of market. As you know, trend is our friend. So we use bullish breaker block and bullish trend. In bullish trend, when market makes a bearish order block to engage sellers, we wait for the market to hunt stop loss of sellers and break above the bearish order block. When price closes above the high of bearish order block, sweeping the liquidity of sellers and shifting market structure, the broken bearish order block will now act as bullish breaker block. To take a trade, we will wait for the price to test bullish breaker block area, and then we can execute a buy trade. We can also look for other confirmations like market structure shift in that area in lower time frame. While executing a trade using bullish breaker block, you should set your stop loss few pips below the low of bullish breaker block. Bearish breaker or block trading strategy. As we discussed earlier, trend is our friend, so we use bearish breaker block in bearish trend. In bearish trend, when market makes a bullish order block to engage buyers, we wait for the market to hunt stop loss of buyers and break below the bullish order block. When price closes below the low of bullish order block, sweeping the liquidity of buyers and shifting market structure, the broken bullish order block will now act as bearish breaker block. To take a trade, we will wait for the price to test bearish breaker block area, and then we can execute a sell trade. We can also look for other confirmations like market structure shift in that area in lower time frame. While executing a trade using bearish breaker block, you should set your stop loss few pips above the high of bearish breaker block. While using a breaker block in forex trading, we should keep in mind that no strategy is foolproof in forex, so you should not risk all your capital on this strategy. Plus, to mitigate your risks, you should always trade with stop loss in place to keep your equity safe. That was it for this episode. See you in the next one.